Signature bank bidders have to agree not to do business in crypto. The European Union passed a data act that will impact DeFi, and the UK wants to raise more revenue by taxing crypto. That and more on the CoinSense Crypto Wire, your regular update of news and events regarding Bitcoin, Ethereum, the other digital assets, and the greater global geopolitical scene at large. Today is March 16th, 2023. Signature Bank, a New York-based bank known for its crypto-friendly policies, has been closed down by state regulators due to a crisis of confidence in the bank's leadership. Reports suggest that any potential buyer of the bank will have to agree to a major caveat: no crypto. Many in the crypto industry, including former acting comptroller of the currency Brian Brooks, have suggested that the closures of Signature Bank and other crypto-friendly banks are indicative of a coordinated effort by regulators to choke the crypto industry off from the banking system. A spokesperson from the New York Department of Financial Services denied any crypto-related reasons behind the closure, stating that the decision was based on the current status of the bank and its ability to do business in a safe and sound manner. The closure of Signature Bank, however, will force several firms, including many crypto firms, to find a new banking service provider. The European Parliament has passed proposed legislation under the Data Act, which includes provisions on smart contracts and the Internet of Things. The legislation includes provisions such as rigorous access control mechanisms and protections of trade secrets integrated into the design of smart contracts, and requires smart contracts to be designed with the possibility to terminate or interrupt transaction mechanisms. The revised version of the bill has drawn criticism from the DeFi community, with Curve Finance stating that it would be impossible to comply with the new regulations. The United States Federal Reserve's FedNow service is set to launch this summer and will handle instant payments between participating financial institutions with 24-hour, 7-day availability. FedNow does not use cryptocurrency or distributed ledger technology, but it has been seen as a complement to central bank digital currencies. The service is expected to be used by financial institutions and payment processors of various sizes, as well as the United States Treasury. The UK has announced a new regulation that mandates the declaration of crypto holdings in tax return forms, which is expected to raise an additional £10 million for the government. Starting next year, UK citizens will have to declare their crypto holdings, which will need to be identified separately on their tax return forms. UK crypto holders will also have to declare capital gains and are subject to taxation when crypto investments are sold for a profit. The Bitcoin mixing service Chip Mixer has been shut down by the United States Department of Justice due to allegations of being used for money laundering activities. According to the Department of Justice, Chip Mixer laundered over $700 million worth of Bitcoin for customers, including Russian and North Korean spies. Prior prosecutions against coin mixers have been met with controversy over their legitimate privacy applications. According to on-chain data, the hacker responsible for the Euler Finance exploit has moved 1,000 ETH, worth approximately $1.65 million, into the Tornado Cash mixer. The hacker still holds 1,500 ETH, worth roughly $2.4 million at the same address. Euler Labs has offered a $1 million reward to anyone who can provide information that could lead to the retrieval of the stolen funds and the hacker's arrest. The protocol has also set up a bounty recovery fund that is funded with at least $1 million of USDC. Ethereum developers have completed the final round of testing for the Shapella upgrade, the final step required for the Ethereum network to fully transition to a proof-of-stake mechanism, which is expected to take place in early April. Once the upgrade is live on the mainnet, validators will be able to withdraw their staked ETH, which has been locked up on the Ethereum blockchain since its proof-of-stake beacon chain went live in December of 2020. You've just listened to the CoinSense Crypto Wire for March 16th, 2023, brought to you by CoinSense.com, a free-to-use sentiment analysis website offering unique insights into the cryptocurrency markets.